Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting with us today. We've got a lot to talk about. We have a very interesting day. We had a nice sell-off yesterday, and this morning we are pre-FOMC, which is at 1 p.m. Central Time. And then after that, we have the news conference with Chairman Powell, and it is not anticipated that there will be any rate change, but the real news of the FOMC is going to be the nuance, if you will, of the answers to the questions about the future of rate changes. And I think the market already anticipates at least one rate reduction this year, and also based on the tariffs, the possibility of inflationary expectations are going to start hitting the market also. So it's going to be an interesting combination of events. So whether or not the chairman is going to commit to rate cuts, I suspect he won't, but that's not for me to say. But he's always going to probably say that, well, things are fluid, which they really are. But we'll see what happens. And the volatility, I suspect, will be in the news conference. And unless you have a specific plan for trading high volatility and reports, this might be a time you would consider observing, studying, and then waiting for the dust to settle for the market to continue doing its thing. Up to you, of course, and hopefully you have a vetted trade plan so you know where your trades show up, when to trade and when not to trade. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is based on structured trades that are available to everyone at no cost in the Bookmap Discord TraderLab community, as well as the library of webinars, and of course, the community itself, which is a group of like-minded traders who have come together to leverage their collective experience. There's no cost for this. It's available to all of you and is really about the business of trading. Trading is not a video game. It's not gambling. That's the business. Now, it doesn't mean you can't be a gambler. And of course, that's your choice. But there is quite a difference between gamblers and those who approach this like a business. I think the goal in trading is, if you're interested in a potential sustainable career and you're not having the success other than random winners, which we all have, then you might want to consider visiting the TraderLab while it's still available to you. There's a link in the bottom of YouTube. And of course, like everything, you have to do the work and vet everything for yourselves. There is no plug and play. And I know we all wish we could, right? But no, at least in my opinion and my experience, which is 46 years. So that's all I can tell you about that. But everybody is different. Now, hold on one second here. Let me just check something. Okay. Let's take a look at now there's a couple elements. When you have a trade plan, and again, this is up to you. In the TraderLab, what I've tried to share are processes to help traders get oriented with the condition of the market and also to navigate potential changes. And the thing for us in trading, of course, is when does it change and how can we recognize change? Now, of course, part of the joy of this is we only know about change in hindsight, but there's things we can look at that can give us hints, if you will, of potential areas or locations of potential change. And then, as they say, act accordingly per your vetted trade plan. Now, the first element, other than what happened yesterday, which was selling. So when you have a selling day, and we had good selling yesterday. It was a pretty nice day for TraderLab participants, those who have an edge and follow their plan. And of course, TraderLab is experienced traders and also developing traders. So it's not about, there's really something for everyone here. It doesn't matter how long you've been trading. Our senior trader has over 50 years. I've got 46, if I can remember correctly. And but it's not length of trade. It's developing a market understanding and then developing a plan So when your trade shows up, you show up. And when you don't have a trade, you hang out. You're a tourist, because the business of trading is about edge. It's not about action. You know, action is a video game. I always suggest, if you want to play a video game, play a video game. But if you want to be in business, in this business, then it's not a video. It is a business of edge. So we are opening, and this is very important. Now, let's talk about yesterday just very briefly. Yesterday, we had some good selling, but we left a poor low. Now, what makes yesterday's low poor? It's a double bottom. And a double bottom from several days ago, and I think it was, let me just take a look here. Tuesday, Thursday. Thursday's low last week and yesterday's low are equal. That means there's a lot of stops built up under that level. If we get below there, we have a target below at 89.5, and I'll show you these levels. So the orientation for me was, the potential was for continuation selling to test those outside levels and then potentially come back inside. Or, and this is part of the thrill, or squeeze out the shorts, go up, and then go down. And the reason for this flexibility was where we opened. Now, I'm going to give you something, and I created this for the TraderLab, something called a context sheet. So it's definitions of conditions. And the problem, of course, is the randomness and the change. So when you start out, at least trying to put together your plan for the day, you would have a process that you would go through, and then you would kind of look at it and say, well, I'm going to line up and then try to get in alignment. That's part of the thrill. So we are opening. Now, this is what's important. So we're starting at the top of the day. What do we know? Let's talk about what we know. The value area high, we're 70 inside of value area, and this is from Market Profile World. 70% of the volume takes place in something called the value area. So the value area high was here, so that's an outside edge, and the value area low is down here, also an outside edge. Yesterday's volume point of control is the highest volume from yesterday. And I always suggest you think of this like shopping. What's too high? What's too low? Where's retail? Right there, retail. In other words, high volume, shopping. Now, let's take it one step further. Actually, before we take it a step further, look where our ETH high is. It's below there. And our ETH low, it's above there. What does that tell us? We are in two-sided trade in value. So contextually, that suggests two sides. And then in the ETH, where's the retail price? It's right here. So we have yesterday's RTH, highest volume is there. ETH, which is the last auction, highest volume is there. Think shopping. ETH high, ETH low. Now, we are opening in range in value. So we're opening, lost it, but it's right around here someplace. RTH open. So this is a fair price from the ETH. So we are anticipating, based on our context, two-sided trade. So why? The market is in balance. What do we consider the possibilities? Well, two-sided trade, likely a neutral day. That means taking out the first hour's high or low, which is why for me initially I was looking at the short side, but it could have been the long side. It doesn't matter. You pick one. And then are we breaking out of the prior day's value area? Well, initially, no. And maybe not. We'll find out. So now let's go to statistics that support this. Again, all of this is before the RTH open. We're opening higher, that means above settlement, in yesterday's range. So if you go to your stat sheet, and this is available to you in TraderLab, we have a possibility of taking out the first hour's high or low, about a 98% probability. Taking out the ETH high or low, a 97-ish% probability. Whoop. ETH high, ETH low, IB high, IB low. So IB low and the IB high, initial balance high, is somewhere. I think it's up around here. And then let's go a little further. The overnight volume point of control, about an 81% probability we get here. The overnight high, 77%. The overnight mid, 75%. And don't forget, previous value area high, 72% probability. And you'll notice it happens to be the high of the day. Isn't that interesting? Previous point of control, 68% probability. It's right there. Taking the IB low out, that's the first hour low, 62% probability. Value area low, 55% probability. Previous low, 34%. So it's not high, but structurally it has potential. That's all I can tell you because we got a double bottom down there. So this is before we open up. Then the next thing is, hold on. The next thing is, where do you trade? Isn't this nice? So let's take a look at the RTH open. Now this, when you have balance, we are anticipating the potential for two-sided trade. So the issue, of course, in two-sided trade is, where do you trade? I find, for me, and I always say this in my streams, and you know, you get the straight oil from the can from me. This is my least favorite condition, because in balance, you're trying to find outside edges. And that's like saying, I'm going to pick the high and the low. Well, I don't have that skill. So what might be, looks like the high to me might just be a burp. And then it gives you a little counter rotation, and you get trapped and you take a stop. So I trade more in this condition because it's rotational, and I take more stops in this condition. So for me, it's very important to focus on getting risk neutral, and then taking my trade, getting risk neutral, and I anticipate I take more stops. Just me, and one of the things for me, just so you know, is range. So when it gets in chop, you don't have range. And for me, and I'm just talking again about me, not you. You guys can do it better than me. I just have I have conditions that work really well for me, and this is one of the conditions that does not work well for me. So I just take more trades and I take more stops. So this is the RTH open. This is a high probability target. Let's remember, overnight volume point of control, 81% probability to get here. Now, we're opening in range in value. So we're looking for two-sided trade. And the idea of two-sided trade is to try to trade outside in. And of course, where's outside, right? Okay, so let's come to RTH open. There. So the market opens basically, right? Oops, sorry. 8:30 Central Time. Here. RTH open. So we open right here. And there's the overnight volume point of control. And there is a sweep, and the sweep suggests lower. Now, I found this so I was looking for short, and I found this not actionable. I mean, by the time you blink, it's over here. What are you going to do with that? So I'm looking for shorts. Now, this is VPOC migration. So right here, I have this liquidity, and I'm saying, well, I want to get short. But I also have a target here. So this is kind of disturbing, because I want to get short, and initially, I am going for the ETH low and the value area low. So this is my first trade. So let's look at this. Now, I know that if I'm in two-sided trade, then I'm going to have buy stops above the opening swing high. Let's make a note of this. And, I'd like to tell you that I can, trade this well. Some days yes, some days no. And it's just the luck of the draw in balance. And it's truly a bit of luck and a bit of edge. So this right here is called a variable high volume node. Now, this little node you see was a retail price, and that's how I think of the shopping. And if this price is too high, we leave it. So we can say if it's too high, too low, and it's just a very quick move, the volume starts here and we leave it. So let's call this a variable high volume node. I made the term up. But all it is I'm looking at microstructure or auctions, and we leave it. Now we have more volume here than we had there. Another variable high volume node. So I'm looking for shorts. And this is a location for me right here, this, to look at a short. Hold on. So I mark them, and I do that so I don't forget where they are. And I also mark them because you notice what you have here. I'm showing you microstructure. Too high. You'll notice there's another structure here. Too high, too low, and there's this. So this is poorly auctioned. So we can come up in here at some point. No clue. VPOC migration. Here, I'm going to show you my first trade. I'm just going to show you. And these are not recommendations. My trades, some days, I mean, it's just a trade. I can't get too much more excited about it because I just follow a plan and I take my stops like we all do. Just not much more to it. So this is too high. This is too high. So right here, I have VPOC migration. This is too high. This is where I'm taking my first short, is against this. And then I'm looking to come out and I'm going here. Okay? So here. So this is my resistance. You can see it right there. Okay? So right here, I get scaled. And I'm thinking, I got you now. And this is my next target, and then this. And then, I mean, at the time, I'm thinking, well, we can go here. We may still get there. I have no idea. It's not my job. So anyway, I get scaled, and I get taken out. Now, the other thing that can conflict with this, which I found really interesting, and, and I look at these things, but I can't tell, are we going to come underneath because this is the outside edge? And remember, in balance, we're trading inside of this range primarily. And then if we fall out the bottom, we have the bonus round. And if we don't, we're just going to rotate. So the choices are wait for this and trade inside, or in this trade, if you take a short, you're looking to come out here. So, and why would I be targeting this? I know. In hindsight, I always ask myself, why were you doing that? Because there's almost a 98% probability I get to either the ETH high or low. And for the value area low, which is a target, specifically about a 55% probability. But we are in balance. So this is viable for me. So this was my target. And you'll notice we didn't get there. Right? So that's okay. And I'm out. I scratch the trade. And now I'm coming across the range. And where's my stops? They're sitting up here. Now, this comes into the book. Now, I'm looking here and I'm thinking, all right, I got my value area low open. By the way, I got to remind you about this. This is a target. And I'm quite aware of it. 68% probability to get here. So when I took this short, I was looking at this for my scale, so you understand. And we got it right here also. So this was a bit disconcerting because we might have gotten this already, because that's a 68% probability. But 98% probability to take either the ETH high or low, and I have no idea if we're ever going to get there to the ETH high. So I just don't know. So anyway, I'm just saying this was the target. So got the scale, and then no bueno. And then what do I know? I know the market's short from yesterday, and I know we have shorts in here from this morning, including VWAP. So once we come across, then the trade has an issue. So then it was, I get taken out, so that's a scratch. So now I'm looking. Look at this thing. This comes into the book. Now, I took another short. Let me show it to you. When we take the stops out, this, and I pointed this out in TraderLab, 15, 14 is an important level. This jumps into the book, and I get icebergs here. So what might I short it? I'm in balance, and my stops are here. Opening swing high. Here's my stops coming out, and my icebergs. It's the liquidity. This is how order flow can help you. Now, I'm looking at this, and I'm conflicted. I don't mind telling you this because I'm in this middle of this range, and I'm thinking, well, two-sided, but and here's the question, did we only come up to the opening swing high to pick, and I call it a stop pick, in other words, the counter rotation, and then if I run out of buyers here, and I see my sellers, and now I get a trigger right here, and I have my liquidity. So I took a short. This, I have no clue. This came in. It actually disturbed me because this is called mean reversion. So I'm coming here for scale, and then I'm holding it again to come out the bottom. So I'm still only on shorts. And, is that a good idea? I have no idea. It's just what it is. Liquidity comes in here. Let's look at the liquidity. Now, order flow can give you some ideas. Let's look at what happened here. So this sets up your short, and this is called mean reversion, rotational trading, my least favorite condition. And the problem for me, not you, me, is where's the outside? Because you could just as well get a little head fake, they pull, and off you go. So there's no way to know. So anyway, back to here, and this is called mean reversion. So I was trading the short side because I still have what? Value area low in the ETH low. So I'm still trading this, but my obstacle is this, right? So because that's where I found my buyers. Is this price, which is this, still too low? My buyers are here, and my liquidity starts coming in the book. So this is a short, this is a scale, and then I'm holding. And I have to, right here, this is very important. I need to get under this. Let's see the behavior. Liquidity. Now here's the other piece. Liquidity, liquidity, liquidity. I'm looking at this and I'm thinking, this is skewing the book. Because when these guys have no intention of trading, they're just throwing meat on the bone here. Remember what happened here? This comes in, pressure. This comes in, pressure. This comes in. What are you doing there? See it? So what I know is this, I have to get under this. That's what I know. And I know still I'm going for this. So right here, I don't have a problem with anything other than my teeth are chattering, which of course is part of trading because we're always apprehensive, and that means fearful. Fearful. Of course. Why wouldn't you be fearful? Now, if you're not fearful, then you must have ice water in your veins. I feel the fear of uncertainty. I don't respond to it as best as I can. I call that hide. That's the lunatic, the primal wiring to avoid risk. But the only way we get paid in this business is by taking risk. So I still have emotionally triggered. So anyway, this trade, fine. Again, taken out. And now we get above all this. Now, this here, now we have something at 9 a.m. called the IB30. And if we take out the first half hour's high or low, there's a high probability we're going to take out um, the first hour's higher low. I hope I said the first half hour. So what happens here is we take out the IB30 on this side. So that suggests more upside. So now I'm backwards, and here's the ETH high. So we didn't get the ETH low. We got the ETH high. So I'm just, thrilled. So now, where's my target up here? Actually, I got to show you this long. Forgot all about this. Now, this is an order flow long. And this is a long I took. I'm going to show it to you. And this is something you have to vet. This is a little more advanced. I posted this in TraderLab. Now, 15 became what I call an over-under. And here's why. I got my IB30. I've got my ETH high. I got my value area high. I got long here. Now, this is a trade, and it's a bit more advanced than TraderLab. So I got taken out of my shorts, and I didn't have a long. I was like going, how you talk to yourself when the market goes opposite your plan, and now you realize you got to adjust. I kind of refer to it as turning the barge around. And the reason I say the barge, because if you've ever looked at barges, they don't spin around. It takes time to reorient. So what I do is I'm continually narrating the behavior of the market. And it goes like, if this, then that. If not, then what? So short, so if this, then that. If I get below here, then down here. If not, then what? Once I come across the range and I come out above here, say Laguerre, now what? So if this, then that. If not, then what? Then north to these. Break high. I get my statistic. Pull back. Right here is a long. And I talk about this in TraderLab. And then the target is this. And I had another target up above. This. So I had two targets. I have that. So I was out of everything except for one runner for this. So, probably, another 5 points. That's worth it, right? So this was my runner. Now there's another. So this, you can see value area. This is the context, balance, two-sided trade. Is everybody with me so far? How are we doing in YouTube? Please give a like if you found this interesting, and support to the channel. Subscribe to the channel, support the stream. So this is I call this a liquidity trigger. It's a TraderLab structured trade. You can vet this. Now there's more. Really? Yeah. And I'm going to show you here. I took another trade here and it didn't work out. Let me show you. Actually, what happened here was I had a runner. So, and we have two trades in the TraderLab, and this was conflicted for me, but I was just trading to this because I know this is an outside edge from yesterday. So this was the main target. And then there was one, the Hail Mary pass, as they call it, for this. So now we have another trade. There's two trades possibly here, and it doesn't matter which one you take. It's all just a matter of what your thing is, what you want to do. There's the IB failure, it's called, which is a short to come back across the range. Remember, in the context, there's a possibility of what's called neutral day. Neutral means you take out the first hour high and low. Okay? At 9:30 Central Time is the first hour. So, and this is the IB. So there's 98% probability we take out one of them. And there's about a 30% probability we take out both of them. IB high, IB low. So in balance, it's possible to come out and fall out the bottom. Who knows? So, and I was going for this. So that was me. So this is my support. There's my long. This is my primary target. So it's just, here to here, and then one out there. Okay, I'm just telling you. Now, the next potential trade, there's two trades here. One of them is when you come out and you get this target, it's all very structured. When you fall back inside, it's called the IB failure. I made it up, who knows? And the short would be here or here. This is your short entry. This is support. So I see the IBF, and we're having a lively conversation about it in the TraderLab. Because, and it's not what I do. I have no, quote, monopoly on what's the right thing to do. In hindsight, we always know what was right to do, but that's not the business trading, because it's just maybe. Maybe it'll do this, maybe it'll do that. So as long as I'm above here, I'm going to stay with my long because my buyers are here. So let's look at the behavior. So I break up, I get the IBF. Now the IBF suggests to me counter rotation. My outside edge is out here. This is a low volume node. I'm going to label it. So the way to look at this is too high, too low, retail, high volume. What happened down here? Too low, too high, retail. And then if we break away and we start a new auction, this is now our support. It's called a low volume node. And all it is where there was demand and the market didn't stay there. Why doesn't the market stay somewhere? Because there's aggressive buyers. They were here. Okay? So that's why it's long, and that's why this is where I'm trying to go, and then north. Range extension, so we got above here, and then either further or break back in to here. So that I'm just telling you the trade. Now, let's watch it. VPOC migration. Right here, this suggests the possibility to push off and go to the single. So for me, this was an encouraging sign because if we accept this and hold the 15, then we can go north. That's what I know. After that, no clue. So too low, retail, outside edge. So let's look at this, because this is important, at least for me it was, because I ended up taking a stop. I'm going to explain it to you, which is fine, other than how you feel about it. So what I'm doing is I'm using this as support, because that was my long. I know there were buyers here, and the sellers here, these icebergs, got smoked, and then they had a cover. Okay. More sellers up here, support. So pulling back here, so we have VPOC migration. So that sets up continuation longs for me. And let me show it to you. And I got taken out here. Right here, I come down. This is my support. And I'm looking for something called mean reversion, which is outside. Pick these stops out. And as long as I'm above this area right here, this low volume node, this sets up something called mean reversion. So here, I got only one runner going. So here, I added back the scale here, and then to target the high and up to the single. And I got stopped out. Okay? So I got stopped right there. Oh, that's pretty nice. That's real good. So that was me. Now, variable high volume node. So here, once I break down, now I don't have a position now. Now I'm going, okay, I come out the bottom and I get to the value area low. So just, that was that, VPOC migration, and I think we're pretty close, right, to where we need to be. So this now is going to be resistance. I'm just going to draw it out here. Support becomes resistance, that lovely concept. And this was a target. These were the targets on the downside, here to here, remember? So look what happened to me today. So what happened to me today was I did not get in alignment well with it. The long side was okay, but it really didn't do much, because of where I had and where I got into it. Then the morning, my targets were this, which we got. So I was always, I was backwards with it. In other words, I was getting short. Just the way it worked out, you know. So now this is the retail price. I'm still thinking the possibility exists, and I'm just saying it's a possibility. It's nothing more than that we are going to take this out, but it's not a recommendation, and then get into this area. We have a single on this side. So 89.5, yesterday's low, and now we have to see. But chances are nothing is going to happen until, and I can't say when anything will happen, until FOMC. So, and now we're back to the 15th. Let's just watch. These are not trade recommendations. It's two-sided trade. So let's come back, and now we're going to watch 15. See if there's any action up at 15. And the reason is it was an important level. We fell out of the distribution. And now, if we look at this, let me just show you what you're looking at. Remember, this is where the longs failed. Now we have the same thing. We have that low volume node, except now we're coming up to it from out here. So this is resistance, and it's not a hard location. By that I mean it's not like it stops there. But I know this is important. I've got my icebergs here, and I'd be looking at a potential trigger. And remember how I was going outside up here for reversion? Now it is the possibility to come back here and come here. So we'll see what it does. These are not trade recommendations. This is balance. And balance, for me, I take more trades. It's harder for me to trade. I need range. So this, if I'm looking at a short in this area, I'm going here. So I have range. Let's just see what it does. And guys, this is not a trade calling room. You don't want to take my stops. I take them. Why not? Why should anybody miss out? So let's watch. Micro high volume is right here, right there. So resistance is potentially there. Micro high volume is here. This is our little microstructure. So what we're looking for here, if it happens, is exhaustion. We have buyers here. We have buyers above the sellers. These guys are absorbed. There's the icebergs. On the opposite side, you have the icebergs. So now we have to just be patient right in here and see if we get a trigger. If we get a sell trigger, you're going there. If we just keeps pushing through, then there's nothing to do. You just hang out. Any questions, guys? Hope you get something from it. It's just the nature of it, you know, life in the fast lane. And by the way, there's traders in TraderLab have traded this really well. So let's watch the behavior. How we doing? And how are you guys doing in YouTube? Hope you're getting something out of today. It is what it is. It's not my, not my favorite condition, but it doesn't mean, as they say, it's not over until the somebody sings. So nobody's singing yet. So this is our area to observe. Outside edge, important location, retail price. So this is the highest volume. In mean reversion, which is pretty much what you got going on here, you're trading rotations. That's all this is right now. And of course, this all can change with FOMC, which is coming up, as you know. So, you have to act accordingly. By the way, there's a webinar or a YouTube video that got posted. It's in there in the library that you guys ought to look at. It was done by a prop firm, previous prop firm owner, or funded accounts. They're not really prop firms, but call them what you want, And basically, and you guys know what these things are. He talked about the statistics of traders who actually pass evaluations and those who fail. It's only about, I guess, 12 or 15 minutes long. And there's a link in there. And Ned, thanks for posting that. You guys all should watch this thing because he has the data to tell you what is the difference between these funded account traders, who tends to pass, who fails, and why. And if you haven't looked at that, and by the way, these statistics apply to all traders. It doesn't matter what you're doing, because in the end, retail traders have very similar behaviors. And you know the failure rate is extremely high for retail traders. You might gain some insight. So that's available for all of you in TraderLab. And remember, if you're in YouTube, there's a link down there and there's no cost. You just have to confirm your Discord username, which is easy to do. You'll just get a little code, and and then you can come to the TraderLab, and there's a library of webinars. Now remember, this is our location, right? Let's see what it does. Outside edge. If this is a short, which I'm not saying it is, I'm just pointing out behavior. This is where we're trying to go. So we'll see what it does. What do you think? This is a structured trade, and you're also in two-sided trade, so it's easy to get hit with a 2x4 in this condition. You have to be very disciplined and be very quick to manage your trade. So if you're taking a short here, which is not a recommendation, this is kind of where your outside is. You wouldn't take any more risk than, right out in here. So it's not terrible, risk reward to go there. So let's see what it does. And it's not a trade recommendation. I have to keep saying that because I take stops. You take stops. Let's get used to it. There's no magic elixir. Aiken is asking about where is the data posted. It's in the TraderLab. It's a actual webinar or a YouTube video that a prop firm owner posted. This is information you typically don't get, but it coincides with what we already know about the failure rate for retail traders, and it's for the same reasons. So you guys might want to take advantage of that. This is the TraderLab community, and there's a lot going on in here. You can see charts, conversations, supporting documentation, statistics. Yeah, neutral stats, about 30% probability, exactly. All these are in here. They're available. There's no cost for TraderLab. In fact, one of our members, Greeny, who, by the way, is in Budapest. I understand Budapest is a beautiful place. He created something called the error cost calculator. I've been talking about it for years. And it's when you make errors, you really know what it costs you. Many traders who are either losing a bit or borderline could be profitable if they reduced their errors. And certain errors are triggered by certain behaviors. Do you know what they are? And have you ever quantified, other than you write it down and say, yeah, I made an error, and you're angry and you move on? Have you ever thought about what it costs you to make errors? And do you think if you understood it, that that might help you reduce those errors? By the way, thanks, Ned, for doing this. This is the primer webinar. You should start with that. It's got about 33,000 views. It's just a high-level overview of this, that this is a business and how maybe to approach it. Meet the TraderLab. TraderLab's an advanced trader methodology. It's advanced trader education. Now, advanced, I have to always say, doesn't mean complex. It's actually simple. What's complex, I think, is managing your emotional states. That's complex. Because most of us don't put our energy into understanding the problems or challenges to operating in randomness. We are always looking for the next trade, the next setup, the holy grail, the only one thing you need. And maybe by now, if you've been doing this for more than, I don't know, a month, you would figure it out it doesn't exist. So most retail traders spend their time hopping, chat rooms and gurus and influencers. And how's that working out? Oh, by the way, just so you know, everything has winning trades. You don't have to have anything and you'll have a winning trade. Stop gambling and start winning. You notice this? We're just pushing through the levels. So this is just balance. Nothing to do. Now, where is that library of webinars? So these are streams that we've kind of selected. And this is the structured trades I talk about, 60 PDFs. My settings and Bookmap, the opening context alignment. In other words, based on where we open, this sets up the condition of the market. Then we have this one here, the trade loss tracker. Thanks, Ned, again. It's a link to Greeny's tracker that he saved with us, so you can actually quantify it. And then the best videos. Where is this? I don't think we got that in here yet, did we? No. Hey, Ned, I think I put a link in there for you. We're going to post this in the library of that prop firm's owner's statistics on the failure rate, and just see if he's talking about you. It may actually help you understand why most retail traders don't have any kind of sustainability. If you're doing what they do, you might want to not do it, and you'll probably be surprised. Anyway, that's a TraderLab community. There's a link in the bottom of YouTube, and there is no cost for it. So this is difficult trading. It's rotational trading. It's two-sided, and basically the market is just rotating in balance. So these are not the days I do well on, so I'm glad I'm streaming, because I would have been looking at this out in here for reversion, and it didn't do it. So I saved myself a stop. The other part of this is, if we come out here, then this is the other outside edge to be looking at. The market can easily take out this high, go up to that single, which was my original target on the longs, or it can fall out the bottom. You've got just two sides active, and both sides get equally abused in balance. Kind of the thrill of the whole thing. How are you guys doing? You have questions? To do my best. I don't use gamma levels. I don't need them for what I do. I'm a minimalist. I've certainly used them in the past and looked at them, but I am more inclined to just follow the behavior. That's what I do. Variable high volume node. This was too high. Look at the language of the market. If this is too high and we left it, then the potential is to return. And these are not trade recommendations. This is a good day, I think, to go to lunch. Just depends. Because the stops are over this current high and under the low. So we can abuse both sides, which seems that's what's been happening. So this is an important level because it was too high. So the possibility is to rotate from here, come back down, or, of course, since it's balanced, to push out and now come here and squeeze. I don't have any idea on what you should do. I only know that out here, this area is an area to observe, but I don't have any trades in this now. If you look at what it's doing, it's just two-sided trade. Value area to value area right now. Squeeze here, maybe there. Or just out here and back in here because we're in balance. And that's, I can tell you what it might do. I certainly can't tell you what it will do. Do I think the VWAP is stronger in neutral days? No, it's not. It's when you have balance, you're going to have mid. Typically, it's mid and VPOC, but here we have balance. You can just see it. It's two-sided trade. Now this comes back here. Now remember, I was taking longs to come back here, right? And that trade failed. It was 15 out here. So now we get above the 15. This shifts up. So this is a hard day to trade. It's not making, for me, it's just not a day to operate now until maybe later or after FOMC. So I would just sort of be sitting here, just letting it go. You see what we have here? Too high, outside, come back in, too low. Just really messy. Here's something else to think about. We create trade plans. The idea is to have a plan. And the idea of a plan is you only trade where you have an edge. Now, the thing about edge is it's not 100%. It's probabilities. The probabilities we need to deal with are what are the probabilities under any condition with any specific location to get risk neutral? Because the most important thing in trading is managing your risk. You get risk neutral, it's like buying a ticket to ride. And then either you scratch or you get to a target or you have a trade management process that you've vetted, and that gives you your probabilities. This condition is, and I'm only talking about me again, is a hard condition to trade because it's all about outside edges. You don't want to be trading inside. So and it's, if this is sitting down here, you are looking for reversions. But you can see that where this yellow line is, it's showing us the high volume is here. Then the high volume is down here. Now the high volume is here. It's flipping back and forth. That means there's no consensus. So that's why it's two-sided trade. There's no consensus. So now we're coming back into this, which puts this back on. So the point I'm trying to make is, for me, there are days, of course, I don't have profitable days. And I think anybody who does this business, if they're being honest with you, they're going to be talking about plan, probabilities, and understanding also that nobody has a winning day every day. For me, so far today, I'm not ahead for the day. Just doesn't, and it doesn't mean that I won't get ahead later if the trades show up. And even if I'm not, the way, other than my emotional state, which we all have, that thing of disappointment and hindsight where you go, gee, I shoulda or I coulda. And of course, when you're at the hard right edge, you don't know, right? You're right here. If you're going to put a trade, whatever it is, you don't know what's coming next, do you? At least I don't. And I can't predict anything. So I have learned, and I put aside my emotional, in other words, how I feel about it. And I go, well, did I do what I was supposed to do? Did I trade where I have an edge? And no matter the outcome, did I do what I was supposed to do? How do you grade yourself? Not P&L. It's doing what you're supposed to do based on your personal plan that you have vetted. Notice where we are again. That's the only way I've found that I can deal with it. Otherwise, I, can really let hindsight come into the picture. What you should have done. It's all clear in hindsight. So anyway, for me, I just sort of go, well, did I follow my plan? And that's a winning day. even if the dollars aren't there. For me, it's a winning day because over time, following the plan is what creates the profits, not the randomness of the way the day turns out. Anyway, I hope that makes some sense. It's just the way I've approached it over the years. And the other part is you have to have parameters set up where if you're just not in alignment. The thing about a trade plan is when your plan and the market are in alignment, you're going to do okay if you follow that plan. When the condition of the market does not align with your plan, then it's not going to work out so well, or you're going to be taking your losses. And as long as you're doing the right thing, you're really dependent on the statistics, not the individual outcome. Just need to say that to you. Now here we have liquidity, and we're pulling back outside. Outside edges out here. Let me turn some levels on here. No, Eduardo, VWAP to VPOC is not qualified. We're imbalanced. VWAP to VPOC is really a more directional reversion trade. This is reversion oriented, but we're not directional. We're rotational. So VWAP to VPOC this doesn't even exist here because we're trading across these ranges. If we were directional, like yesterday, we were directional to the downside. Then I think we were talking yesterday. I think the last short, I can't remember anymore. I don't know if I mentioned this in the stream or in the TraderLab. The last short was an outside edge reversion inside, which was a really nice trade, which I narrated in the lab. I don't call trades. I just point out things to observe. But today, if you operated the same way, it's not qualified. The last reversion trade I tried was out here to come back here, and that trade failed because then we came all the way back across the range, which is possible, right? So that was okay. And then that's that, you see. I got to turn some levels on, guys. See if these levels will show up for us in Bookmap. These are coming out of Investor RT, which is my higher time frame tool. Hold on. Okay, there you go. Variable high volume nodes. Liquidity back in the book. So this is really just the outside edge would be out here. And you've got this, there's just no trade for me. And it doesn't matter to me if now we go here. Just is not important anymore. See this? But you'll notice we're not outside. The outside is out here. So if you get into this thing, this is where you're trying to go. There's not enough range. So it doesn't qualify. If we had come further outside, I'd be looking at a long back here again. It's still mean reversion. This is the same trade I was talking about earlier where I got stopped. So it's the same trade. It's just no range. It doesn't qualify. This is the area. And notice what happened here. Icebergs. So anyway, we'll see what this one does. So I don't have a lot here going on. I know if I get out here, this is why I was looking for, I had this as a target, when I was on my longs, is because I got the liquidity in alignment with the location. So when I'm looking at these auction-based locations, which this is, and I see this, that's what gives me the target. doesn't mean the market will go there without taking out the low of the day first or ever go there. So the idea of this is always trying to get in alignment with it. And now if we go here, I find it very interesting. Because the idea of getting, so for me, I was coming, the longs were to here, which was fine, and then to there, early. And then the shorts, I should say the shorts early were to here, and then I was going to be looking to come back across. Instead, it came down, didn't get there, got here, and then came across and went this way. So I got long, got this, and then I was looking for this. And then, of course, or not of course, but then it came and came down here. So I've been out of alignment with it today. It's been zigging, I've been zagging. So I've just not been able to get in alignment well with it. Had profitable trades, but overall not in alignment. Doesn't mean that there won't be more to do after FOMC, or even maybe a little before FOMC. But right now, nada. Introductions, I don't watch the dome. I watch the liquidity. I watch the heat map. I'm not interested in the rest of it. I'm watching the delta. I'm watching the icebergs. I'm watching the liquidity stack. I'm looking at the behavior. What is this? Here's an interesting thought. When this comes into the book, we see the reaction. Are these guys buying, or are they, what are they doing? Did they get long? Now we see buyers here. We see the sell stops come out, and we're in balance. Why does this come in the book? Is it to push the market down? It didn't trade, so that these buyers can accumulate more? Or do these guys pull as we approach, and it's like opening the hatch and we come down? What we know is the buyers were here. That's absorption. When you have absorption, it creates an outside edge, and retail traders put their stops here. Well, the way I've observed this, I do not personally want to run in front of this. If it comes outside and takes the stops, and then I see more absorption, what that tells me is the liquidity that's coming out, the sell stops, the market orders, is being absorbed. That's what creates that. So as I come outside, if I come under here, where were my buyers active? The buyers took control back here. So if I look at this, this is where my buyers took control. Sellers were here. Sellers were there. There's the icebergs. Buyers are here. How do I know? Because I had delta sellers, and they were absorbed. See, the buyers get above the sellers. Now I know I got my buyers here. I know my stops are sitting here. If, big term, if I come under here, I'm going to be looking in here to see if I get these buyers in here again. Now, it may not get there. We could see we got buyers here, and this stayed in the book. And now this is starting to thicken up over here. Is it the buyers looking to sell here, and they're just going for this range, which would be nice if you're trading, 1,000 lot or something, or, because these are icebergs. So how do you use this? Well, where's our outside edge? It's out here. So the idea, this is reversion. This is outside in. If you don't have range, you don't have a trade. If this was further out and I got some stops out, this would be my trade. It'd mean reversion out to here. So I don't have a trade. And if I get through this, and we don't know what this is doing here, do they really want to sell? Or are they just putting this here and then they pull it? See, that's the thing about liquidity. It's like standing on a banana peel. And this right here is this is one player, this little amount. And the rest of this are smaller players. Right there. By the looks of it. All right, take that back. Sorry, I got it backwards. This 616 is one player. So it's all of this. And this little bit is smaller player. Got it backwards. So outside edge, and notice what's happening with the liquidity. So this is not a place to operate. This might be a place to observe out here and out in here. Still nothing to do. How are we doing? It's just the nature of the day, you know. Ben, Trendlines? Well, I don't use Trendlines, Ben, but you can use them. I mean, we all used to draw lines, but everybody sees the same stuff. What I try to do is I'm looking for things that other traders don't see, who don't have order flow, who don't understand market mechanics, who don't understand auction market theory or how to use a tool like the volume profile to see participant behavior. So a trend line, no, I don't use them. I mean, think about it. What is a line on the chart? Doesn't mean anything, does it? By the way, everything works randomly. If there's an actual edge with a trend line, then that's fine. But the fact there's a line anywhere doesn't mean anything. So anyway, I hope that answers your question. But so no, I don't use any trend line because I'm operating right here, right here, and I'm operating in this area. So what I do is I'm looking at behavior, and then I'm looking at locations where the market might come. So I know the market might come and take these stops out. Notice what's going on here. Let's watch it. Let's just see what it does. I don't know. Outside edge, low volume node, and it can come, you know, out here too. If there's enough range, the idea is to come back here. But I can't buy this because of range. Now, here's something that's interesting. It's the range, because we can understand how the market works. You can learn that in TraderLab. Everybody can. The thing about trading reversion, which is what this is you have to have enough range for the trade to qualify. So we're going to see the behavior, because the market or the auction process, which is what's outside, what's too low, what's retail. Think about this like shopping. You go to the store, if it's on sale, and you perceive this is the high volume. So at your store, high volume is a retail price. Buyers and sellers agree to do business. Well, if it goes on sale, somewhere out here, the price will get too low, and the sellers will not sell it to you anymore. And if you want to buy the product, they're going to raise the price, and you're going to have to pay up. And the nature is to come back there. That's the mean. So this is what mean reversion is. It's always looking to come back to the mean. Now, to make you a little crazy, the mean is fractal. It happens in all time frames. So right now, this is the mean. Going to yesterday's RTH, this was the mean down here. So it can go too low. In fact, when we opened, remember where the open was? ETH mean, retail price, too high. Where did it end up going? Down here, too low. Where did it end up going? Came across the range. To where? Too high. Then what did it do? Come back across the range. Take out the stops. Down here. Too low. Then what? Back across again. So it's two-sided trade. You want to hit yourself, step on a rake a few times. It's probably more enjoyable. And the idea of this is to be very patient and to try to trade outside edges. Now, if we go down in fractal or time frame, then this is the same behavior in a shorter time frame structure. We're coming outside, back in, outside, back in. What were we doing in the quote higher time frame? outside, back in, outside, back in. So fractal, outside, back in, make you nuts. But that's what it's doing. Hope that's helping, guys. I mean, it is what it is, you know. This is trading. It is just what it is. So the idea is to have a trade plan and to just wait for the trades that are aligned with the condition. And nobody nails it. Or if you do, you come to TraderLab, clue us in. Because in this condition, you can end up taking a lot of trades. That's what happens to me. I take more trades, and it's my least favorite condition, unless there's range. If I have the same condition with range, then it can be quite nice because I can make up for the stops I take trying to find an outside edge. Where's my outside edge? It's out in here. And this is where the mean is. So that's why this is not a long. Let's come back to where our support might be. Where was it? Isn't it like here? Let's just see what it does. And these are not trade recommendations. It is so easy to get abused in this condition. I think this, you know, a lot of times, you know, a trader needs to know where they have an edge and when they don't. Because if you're buying it here to go there, that's FOMO. If you're looking to buy it here to go here, if that's in this condition, you might not want to take it. We know our buyers were here and here and here. So this is the area. And then you'll be trying to go here. Is that worth your risk? I mean, look at this, 15 to 17, 2 points. I think you're better off ordering lunch or staying in the Barca Lounger than putting risk on for this. Because it's so easy in this condition just to get chopped into oblivion. This is like a Cuisinart. So now for me, this is a structured trade I can't take. I can observe it and I can identify where the behavior might happen, which is in this area, right? And remember, I identified this for you, but I don't have the range. So I'd have to be getting into this thing like here. Where am I going? See? Not my trade. I just don't care about it. You know, the idea, guys, of trading is, I think, we have to remember, it's not about action, it's about profit. And then what qualifies a trade? If you're going to put risk on, you got to get paid for that risk. So, and for me, the most important statistic is getting risk neutral. So I buy my stop on my runner or runners, depending how I structure. So I have to be able to enter very well in areas, which is here. And this is where I'd be trying to go. And the thing about this is I don't enter here because that's not my skill. I need to see absorption, which is there, and then the buyers above. And I'd really need to be in, not here. I got to get in down here. I might not have a shot at that. And I'm trying to get here. And it's not at that. It's like a tick before. So if I get along here, well, how can I do that? I can't. So I just observe it, narrate it, think about it, and go, well, and here's my micro high volume structure. This is your little micro VPOC. In this little structure, the buyers are here, right there, right there. So now we're either coming here or we're going to fall right out again. So we'll see what it does. So this has alignment. It doesn't have range. I hope that makes some sense. So in TraderLab, what I always suggest to traders is you're constantly narrating. If this, then that. If not, then what? If this is the outside edge, if this, then that. If not, then what? Then down you go again. That's all I can tell you about it because this is what structure how structure operates. We're in mean reversion, and underline the term mean. So we'll see what it does. This is not qualified to trade. It is a behavior, though. And pre-FOMC, you have to decide. I find for me, I trade pre-FOMC. And then, once things kind of quiet down, before 1 p.m. Central Time, which is when we have the meeting minutes, then I don't trade. And then we have the press conference, and that could be volatile. And you can't beat it. The thing is, we have news reading algos now. By the time you hear something, they already got their trades on, and the market's already moving. So you got to know where you fit in this. Let's remember what happened here. The buyers are here, and the buyers are there. The retail price is there. This is support in a microstructure right here. There's the high volume. Think of this like retail. Too low. And what's in the next fractal up? Retail. So I'm going from microstructure. This little high volume is the same as that high volume. This is micro. Think Matryoshka dolls, like those Russian dolls. We're inside each other. So this little behavior right here, this will confuse you. I'm not here to do that. When we break high and we come back, this is a trigger. So it's an entry there. Now it's not. I'm just saying this. But this pullback to here is reversion. The coming up here is reversion. So it's compound or fractal. Break high is a trigger. Back here is a retracement to test that micro high volume. And then going up in quote time frame, this is high volume. I'm going from micro high volume to high volume. If it gets there. And again, nobody knows. So if you have enough range, this would be a mean reversion long. You don't have it, you don't take it, but you narrate it because you got to create muscle memory, unconscious competence. And remember what happened. My buyers are here. This is absorption. Don't know until hindsight. There's my buyers. They're above support. My microstructure is right here. So my stop on this thing, and this is not a recommendation. Remember, I'm just talking structure, would have to be under here. And this would be your scale, 17.5. See if it gets there. If it does, and it doesn't have to, it could just fall out the bottom like any other trade. So if it gets there, you're seeing mean reversion. And this is also mean reversion. So this is reversion to this mean. And if it gets there, that's the mean of this. So it's mean to mean. And that's why we say it's mean. It's mean reversion. Hope it makes a little bit of sense. Is this making some sense? Mind blown, you can use whatever works for you. Limit orders, market orders. There's not a better. It's all about metrics. The thing you'll find with market orders might lead to more FOMO, depending on you, versus the discipline. The fear we're going to have emotionally is if I put a limit order in and I see this, I'm going to end up, if it's a market order, I'm going to buy it here. If I put a limit order, this is where I want to buy it, right above here. Not at it, one tick above it. You'd be long here with the limit order, and then you have a limit order to get risk neutral, 1 or 2 ticks above, before there. And then it's wherever, after that, it's sort of, you're on your own, The thing about getting risk neutral is now you calm your psychology, the fear. And everybody has it. So let's all be mature here and say we're all triggered emotionally because we're wired for it. So nothing wrong with that. It's better to understand it than to deny it. If you understand what's going on psychologically, you can build out tools to understand, to manage it better. That's what the error cost calculator is about. That is being worked on in the TraderLab. That's being developed, and that's available. And also I mentioned that YouTube video that one of our participants, JJ Marks, posted on a former owner of a prop firm, or funded accounts, which are really not prop firms, but they call themselves that. What the failure rate is and why traders fail statistically, what they found. Do you know why traders fail? Well, part of it is they're gamblers. The other part is they don't understand how the market works and they don't have an edge. Other than that, so that would be our scale coming right here. I'm just showing you a trade. Doesn't mean anything. We wouldn't take it because it doesn't fit. But the mechanics of the market, this is what you need to learn. Here's how this would work. Let's assume, now the auction doesn't care about the range. It just behaves a certain way. And this is what the auction does. This is mean reversion. Remember, the mean is here, the mean is there. Think Russian dolls or fractals. I'm trading inside of each of these elements, are all related, but they're all the same. Russian dolls are a vertical integration of time frames. And I don't think of time. I don't use time here because there's no clock. How long does it take for this behavior? Am I going to wait 5 minutes? How long did this take to give me a trigger? 11:41 and 10 seconds to 11:42 and 22 seconds. A minute and 10 seconds for the trigger. And then the entry is there on a limit order. The scale would be here on a limit order, 1 tick ahead or 2, up to you. And then trade management. Can you take these concepts and you have to vet them? And can you use these concepts to differentiate your outcome from other retail traders who are using mechanical processes? Now, I'm not a mechanical trader. What I am is an auction-based trader. And that means the behavior of the participants. And I'm not able to predict anything. What I try to do is get in alignment with what I perceive to be the condition of the market. And when I get out of alignment, I'm just like everybody else. Is this making some sense? This is TraderLab. You can learn this. Adil is asking me, do I only take mean reversion setups? No. But the condition of the market determines what I take as far as how I trade. Not, in other words, yesterday, well, that's a very broad question because mean reversion is used differently in different conditions. In this condition, because this is the fairest price with the highest volume, the market tends to rotate and then come back and visit it. Now, this is the same trade I took earlier where I took a stop. Let's come back and let's look at the difference. Notice where this is. This is the same location. And for me, this was a long I took. I took a stop. It's the same trade. Right here, right? I think this is where it was. Can't remember anymore. But notice the trade. Out here, right? I think I got the right location, yeah. So there, same trade. That one's a stop. This one, it is what it is. What's the difference? Let me give you the answer. Randomness. Here's the other part of this. Mean reversion, which is mean, is the most common behavior to trade. So it presents its own issues because where is the outside edge? Was it there to there? Is it there to there? You see, this is mean reversion, not qualified, no range. And this is mean reversion. The entry is there, maybe not qualified, subject to where your stop has to be. Your stop needs to be under here, under this. I don't know, 14, 15, 16, 3 points to do what? Yeah, to me, this is very borderline. And I will not say whether I would trade this. I'm going to say, unless you can enter on the head of a pin, which most of us can't because of FOMO, because we're afraid we're going to miss it. Oh, it's going to the moon. So what do? We buy it here. What does a disciplined trader do? They don't live and die on each trade. They're here for the long game, not for the short game. A disciplined trader would go, okay, my buyers are here. These guys were absorbed, so my buyers are here. My buyers are here. My buyers are here. Where were the sellers? Let's look. Let me just show you microstructure. This is what I share in TraderLab. How do you do this? Well, if you understand order flow, and we know these guys are absorbed, and we know our sellers are right there. Why do we know sellers are there? Because I got buyers. Why didn't the market keep going? Because I have my seller. There's my sellers. Why isn't the market going down? Well, right here, I think it's going to zero, don't you? But what happens? Icebergs. Now, I don't know at this point, but what do I know here? When I get back above this and I break here, I have a trigger. Where were my sellers? They were right there. Notice where the entry is. Can you develop the discipline to manage your fear of missing out, your FOMO, to wait for a trade and then scale one tick? And now you'd be risk neutral if this was qualified. I'm not saying it is. I'm just showing you trade. This is a structured trade. And then you're, hanging out. And where were we trying to go? Now you can do the following. You can come back here, resting liquidity. And if we take this liquidity, where was the target from this morning? It's there. Are we going to get there? No clue. What do you think? See? Where was our structure? Wasn't it here? See? This is structured trading. You can learn this. I'm not saying you'll be profitable. You can learn it. And if you have the discipline to go one step at a time and only trade where you have a statistical edge, you might be able to build out a business that's sustainable. And I say maybe because who knows, right? Nobody knows. Ultimately, and this is a personal belief, I believe anyone who comes to TraderLab can learn how to trade. And I always have to say, past performance is not indicative of future results. The major obstacle you will face if you're looking to build a sustainable business is your psychology, your mental state. And everybody talks about it, but most retail traders are looking for the magic, the holy grail, the next setup. You don't need any. You could have one vetted structured trade, one that has a statistical edge and the patience to wait for it. Manage your fear, and you can have the opportunity to become a sustainable, profitable trader. This is about the business of trading. TraderLab is about helping traders build out the business. Where were my buyers, by the way? Weren't they there? There? Now, this is where you're trying to go, just so you know. Because if you got here, and again, I'm not saying this is qualified, you'd be risk neutral. Your stop could be down here and you're hanging out because either the trade is going to fail and take these guys out, or we're going to squeeze these guys and then we have this. You guys can watch this, see what happens. It's not a trade recommendation. By the way, if you're interested in TraderLab, there's 60 PDFs of structured trades you can download. Select a couple. You've got to research them, vet them for yourselves. The TraderLab community is available. It's there for you. There's no cost. There's a link in the bottom of YouTube if you're inclined. Visit TraderLab, say hi. It's a great community. It's about the business of trading, and it's not romper room. So if you're interested in the business, feel free to visit the TraderLab. Use the link in the bottom of YouTube. Otherwise, I wish you the best of luck. I appreciate you visiting the TraderLab today. Don't forget to give a like on the way out. And don't forget FOMC, so wear a helmet. And I look forward to seeing you guys tomorrow. Thanks again for visiting the lab today. I enjoyed visiting with you, and I hope you enjoyed visiting with me.